Welcome to Going Long with FCLT Global, the podcast that dives into the world of long-term investing and strategic decision-making, hosted by Sarah Williamson. Going Long features thought-provoking conversations with some of the brightest minds in finance, economics, and business today. Each episode will bring you exclusive interviews with renowned executives, investors, and experts who are driving change in the world of finance, getting their unique perspectives and uncovering strategies that have shaped their success. Whether you're an investor, a business leader, or simply curious about the forces shaping our global economy, join us as we explore the power of long-term thinking. This is Going Long with FCLT Global.
Thank you for joining us today for our episode of Going Long. Today, our guest is Andrew Liveris. Andrew is the former chairman and chief executive officer of the Dow Chemical Company and the former executive chairman of Dow DuPont. Andrew is a recognized business leader with more than 42 years at Dow and experience in manufacturing, engineering, sales, marketing, and business and general management. His 14-year tenure as chairman and CEO led to a radical shift from a chemicals manufacturing company to a science-driven innovation solutions provider and groundbreaking trends such as the historic Dow-DuPont merger. Andrew is a director at IBM, Saudi Aramco, Worley, Lucid Motors, Novonix, and the Minderoo Foundation. His new book, Leading Through Disruption, is available now. And importantly for us, Andrew was one of the founders of FCLT Global and continues today as a strategic advisor. Andrew, thank you so much for joining me today.
Lovely to be with you, Sarah.
So, Andrew, you've written this fascinating book called Leading Through Disruption. And one of the things that you talk about in your book is your upbringing and your background in Darwin, Australia. I've been to Darwin, but many people probably listening to this have not. So can you start with a little bit of that context about where you grew up? Tell us a little bit more about how it shaped you.
Thank you, Sarah. Yeah, having been to Darwin, you would identify with something that probably the whole world doesn't really know. But if they looked at a map, they'd see it sits on the doorstep of Asia. And so Darwin was one of the original multicultural, diverse communities in Australia with an Asian flair and an Asian background. And much like the west coast of the US, a lot of the people from China and Southeast Asia came to Darwin in the 1800s, well before Federation even. So the backbone of the place is diverse and multicultural. And then throw on top of that the indigenous element. So the Aboriginals, and I grew up with Aboriginals as my friend on my basketball teams, and Asians. The first mayor of Asian descent in Australia was in Darwin. So I grew up with this expanded way of thinking about things from a young age. And then growing up in a Greek immigrant family in that community, I never felt, like I was something different. I wasn't a minority. I was part of the diverse majority. And I think that I didn't know it at the time, but that propelled me to a future that basically never saw race, gender, language as barriers. As I saw them as opportunities, and I grew into my career where I went to school, and then when I joined Dow with that mindset, which I think, again, it's good for young people to hear this. You don't think of it as an advantage until it actually plays out, and then you start to see it, and you say, "Oh, not everyone thinks that way." And I made a name for myself in Dow in the early decades of management by being inclusive and being, open to change and actually embracing it. And I think that's the background I grew up in. I just basically never saw barriers. I saw opportunities in difference. And I think, we get the 21st century playbook that the book talks about. It's really what I'm at the heart of saying in that book. In fact, even the title, they kindly said a change maker. I never thought of myself as that, but it's true. I was in the business of making change real, and throughout my career, my Dow career, now my current career, and that was, I think, Darwin that gave me that.
Yeah, that's great. That's great background and color for sort of who you are, and we all have those things that are sort of imprinted on us from where we grew up. So if we focus on the book, you do make this point that many leaders, most leaders today, were sort of taught a 20th century playbook for leadership, but you've now established the Andrew Liveris Academy for Innovation and Leadership at the University of Queensland, and you're really talking about teaching leadership for the 21st century. So tell us, why is that different? What were we taught that doesn't serve us well now?
Yeah, it's always a great assault. I mean, I remember early on in my CEO tenure, I felt that my time was the hardest time and all previous times were easy, right? Well, that's not true. I mean, every decade, every generation has their challenges. So what's different in the 21st century? What do we teach at the academy? Is this notion that with the digital era on our doorstep, AI, as we are now all talking about, environmental issues of the planetary kind, social equality issues that are enormous, and transparency that comes with the digital age, and then geopolitical fissures that speak to the loss of globalization as a binding glue that we had in the latter part of last century, that this century we haven't worked out what the new globalization looks like, and therefore we're getting tribalism. These are, constant now disruptions that are the new, I call, abnormal. And I think this constant disruption environment, constant uncertainty, which I noted during my CEO tenure, and I speak about with examples in the book, these tectonic fissures that are colliding together means that we need new types of approaches and institutions to handle them. I'd like to think our common child here, FCLT, and what we're doing for a living, what you're doing for a living, was built with the 21st century in mind, is that really we've got to put together ways to tackle this constant disruption, this new abnormal, and with a new paradigm of thinking. And then if I throw into it the disease of short-termism, which is all pervasive, which digitalization is accelerating, right? We want the answer in the moment. It's we've all got ADD. Breaking news is news, and everything is breaking news. And so this compounding effect means that we have a new reality, a new kind of design in front of us. And what I sort of noted during this 18 months of COVID when I wrote the book is I stepped back and reflected that, and my learnings from the academy, we were teaching at the academy virtually. We're now up to 110 students. And what we were teaching them in a one-year course is the new context of decision-making, not the content. Content you can get in functional curricula, MBAs, any sort of undergraduate degree. But the new context of decision-making needs to be put in place, and a new solutions mindset needs to be put in place. And what I've encouraged in the curricula, and these young people are embracing, and in fact, I think what I'm trying to achieve, well, I know what I'm trying to achieve with the book, is to absolutely propel young people into this generational thought that they have to take accountability and ownership early to help lead the triangle that we all live in, society, business, and government, to help lead it to designing the institutions for the 21st century. And I make suggestions in the book, and we can talk about them in a minute. But it's really the foundational stone here of the whole book is to prompt and provoke. And that's why I write the book the way I do. Every chapter in the book has lessons at the end based on real life examples. And I don't say I've got the answers, but I'm provoking the thought process to begin the solutions mindset that in particular the next generation needs to adopt. But frankly, our generation can't abdicate. And I'm certainly not abdicating, and you aren't. And so this is why I think we've got to teach, coach, mentor to get to this new place.
That's really helpful. So one of the challenges you raised here and also in the book is this geopolitical challenge. And, in terms of institutions, you use the phrase G0 instead of the old G7 or G20. And then clearly there are some interesting and very challenging issues going on between China and the US in particular, but other countries as well. So, how do you push people in that context? And one question I think you were pushing people to think about was, are they American companies operating globally, or global companies that happen to be headquartered in the US, and you could substitute other countries for those things? So how do you counsel a business leader who's really trying to on FCLT long-term capital allocation decisions But amid this geopolitical uncertainty, or the new abnormal, as you say.
Yeah, the geopolitical question, which I've already alluded to with this tribalism word, it's Yogi Berra, that famous American for people that we all quote. It's deja vu all over again. If you've been around long enough and you spend time, as I have, the question on Darwin, I'm intellectually curious all the time. I'm a constant learner, and I've noticed the rhythms of history. They don't repeat, but they rhyme. So I joined a multinational corporation, right? The multinational concept in the era pre-globalization was mostly American companies going out to the world and teaching the American playbook. And so I grew up in that system. And then in the 90s and the 00s, with WTO and multilateralism, we got, in essence, the beginning of what we now have seen as globalization 1.0. This notion that you don't have to make everything in your country. You can actually go to the best place and find the best answers on capabilities and trade, and then open markets, and then free flow of money and human resources and people. And I grew up, as a globalist that way. I mean, living in different countries, learning those countries, and then never feeling I have to teach them the American way. It's really the highest standard prevailed. That's the beauty of the American global corporation, is we rise to the highest standard that exists, whether it's American, European, Australian, Asian, Japanese, you name it. And so we learn from each other. So that system of globalization and geopolitics brought us this notion that, in fact, the world can operate together, that, the United Nations is important, but actually globalization actually almost superseded the United Nations as a way of dealing with each other on a, let's call it a human way, partners collaborating. Well, that's being torn asunder. I mean, we have literally, that model has broken badly because of several things, which, the rise and fall of empires, studying that, being of Greek descent. So the rise of the American empire and the rise of the Chinese empire is now coincident. We are now at that spot in human history where there's an alternative way. And that alternative way is not America out, and it's not even global in, which is the period we just went through. It's really, there's a way called the Chinese way, and they are not going to adopt the American or Western way. And frankly, they look at that and say, your system is failing, actually. You're leaving lots of people behind. You have tons of people in prison. You don't treat your minorities well. I mean, look in the mirror, and there's a lot of things that we can say that democracy and capitalism together has failed. And I suggest that in the book. And that's when I go to inclusive capitalism, which I'll get to in a second, which I'm sure you'll ask me about. So the geopolitical arena that we're in now, is being recreated around these two orbits that are forming, the US orbit and the China orbit. Now, enter stage left Donald Trump and the 4 years of America retreating, It created this now new challenge of American global corporations, which you quoted, which is, who are we actually? What is our playbook going forward? How do we, in fact, incorporate these massive geopolitical changes? Because we literally operate one culture around the world, the culture of Pfizer, of Unilever, of Dow. So what happens now? Do we allow this to happen and division to be the way forward? Or, as I suggest in the book, no. We step up and create this new way of humanity to deal with each other that recognizes each other's strengths. What's the best of China? What's the best of America? What's the best of other countries? And integrate that into the new way forward. So I think the politics of division and short-termism means that governments aren't able to do that. And the United Nations totally is ineffective. And that all these things we put together on a global basis, like the Paris Accords or the COPs that are being formed, these groupings, G7, G20, G anything, is G0. And top-down decision-making is unlikely to prevail on the new playbook. So that's why I step into the breach and say business has to lead. And so I think it's an opportunity for business, but of course there's an anxiety and almost an anxiousness. And here we are with an American election in front of us. And here we are with 40% of the free world about to be reelected, where the politicians, the leaders, the Churchills, the Merkels, where are they in the election slate? So we really literally now can't stare at this and say, you know what, just let it be. We have to step in.
And stepping in has been, businesses have been stepping in, I would argue, in the last, 5 or 10 years more strongly than in the past, FCLT, but many others. But there's also a lot of, as you know, political pushback on some of that. I think some politicians have said, wait a minute, your job's to run a company. My job is to, represent the people. Why are you stepping into why are you trying to do my job for me? So how do you think about, one thing you said in the book was, it's not your responsibility to transform child labor laws of another country until the owners of your company tell you that it is. It's like companies get caught in these things, whether it's child labor or whatever the hot topic is of the day. So how do you really think about these sort of sustainability, very challenging, either ESG, political, whatever we want to call them, issues? How do you bring those into the boardroom in a productive way?
I must, I've already done it once or twice in this discussion, must give great credit to the architects of the company I had the privilege of working for 43 years. The founders, the people who succeeded the founders, all family members, until such time as they institutionalized it professionally with people like me coming up in the system, which is that we absolutely, totally, the long-term cost of ownership mindset is given to us by society. It's not given to us by government. So in the book, I talk about the license to operate from society. And I think we sometimes lose our way there, that we think the regulator represents society perfectly. We think the financial institution represents society perfectly. Well, it does not. And in fact, when I talk about the activism issue and what FCLT is focused on and trying to change the way institutions look towards companies for the long-term value creation, it is truly the virtuous circle of capitalism that I'm basically embracing and saying, because we have imperfection between the financial owner, I say renter, and the government regulator who has imperfect knowledge on some very, very big subjects like digital, like AI, like climate change, that these topics, regulatory topics normally from government, these topics, financial topics from shareholders, obfuscate what is really the issue that we have to embrace, which is multi-stakeholderism, is collision of all these topics and then distillation of answers that absolutely totally then get integrated in your strategy and business plan. So it isn't anachronism I'm responding to. It isn't wokeism. It isn't ESG, good or bad. You're losing the point. And that's why the first chapter in the book is all about environment, social, and governance, which is, I'm saying, elevate ourselves to the notion of getting the long-term cost of ownership model back into play to get actually the license to operate from all your stakeholders, not just the regulator and the financial owner. And if, of course, that means educating the regulator and educating the financial owner, that's on us. I mean, boards have to change on being able to do that. We have to absolutely not say, well, they don't understand that, let's go yell at them, or let's go to a congressional hearing, or let's be upset at an activist. I mean, I learned so much from my engagement with the activist community about what their mantra was. I said, okay, whether you're right or wrong isn't the point. I think we're operating in a world where we're not both wrong. We are both right. But then how do we absolutely put short-term and long-term together into an investment strategy? So on environment and on climate change and on CO2 pricing, I at Dow made that a business strategy. And I think the purpose-driven businesses that are out there that you are obviously influencing, that are on your board, that are part of your membership, is absolutely embrace that philosophy. The Salesforce, Unilever, these companies now, these companies have said, it's a strategy. I need to create value from that strategy. But to do that, I've got to engage all my stakeholders, and I've got to step in and be part of the solution. So I talk about the 5 Ds, right? So the first phase, right? basically denial. And then you say, okay, no, they don't get it, so I'm going to defy. And then you get past that and say, they're not going to go away. So now, oh my God, well, I better get into a debate, pro con. Okay, fine. Okay, but then post the debate, let's get into a dialogue about the right answer, the fourth D. And if we just stop there, we're already in a better place, right? But here's the place we've been stuck in for about 20 years. Pretty much all we're doing is dialoguing without actually prototyping and scaling and doing. And that's what FCLT is promoting. And that's what I was doing. And what I've done now with the book is let's go prototype the solution space so that absolutely it isn't either or, it's an and in this conversation, famous Jim Collins quote.
All right, you've raised a whole bunch of really important questions there, and I love the idea about sort of prototyping. So let me pick on a couple of them. The one is carbon pricing. You just mentioned that. We at FCLT have been thinking about how do you prototype, to use your word, that regardless of what a government or a regulator does somewhere else. And I know you've thought a lot about this. So how do you think companies or investors can put a price on carbon, even in the absence of government regulation?
Well, we did it at Dow, and I know other companies that are doing it, which is we set an internal price on carbon on all our decision making. We benefited a lot from, and in fact, a groundbreaking partnership with the Nature Conservancy, where we basically brought them in, I don't know, a dozen years ago, and said, okay, look, we have common goals here, and we need to figure out actually how we can take responsible decisions on our footprint. And so we came up with this notion of footprint, handprint, blueprint, which I can talk about. But this discussion was our impact to the environment needs to have a price and a value. And our impact can't be then what's inside our plant fence, our footprint. It needs to be in what we send out from our factory fence. And then obviously, ultimately, to how it impacts the planet, which is the blueprint. And so footprint, handprint, blueprint was a mindset that said, okay, now I've got the strategy, now I've got the direction. Nature Conservancy, let's do some prototypes, the word I used earlier, and let's scale how we expand a waste treatment plant, gray infrastructure, and change that to using nature to be our treatment of waste so that we don't affect nature. And that mindset led to saving $250 million of waste treatment facility in Texas with doing it with a value on nature instead. And so we developed a tool that absolutely helps companies, and we made it available free, to absolutely put metrics in place on how to put a price on your use of air, water, and nature, trees, etc. And I think that value setting mechanism enabled us to migrate to a place that said, let's set an internal price on carbon. So I know there are other companies doing this, and I know all of us who basically feel sustainability is a strategy would love a market signal that was in common to us all, US, globally, that absolutely put us all on even playing ground. Right now, we have the worst of all worlds, right? We have some states in America doing it. We have some countries doing it. We're talking about prices on tariff, carbon tariff, to regulate imports and exports. So these patchwork answers aren't the right answer. But I'm trying to be an optimist with the notion that we might eventually get to a global price on carbon. I don't see it anytime soon. So I think in the meantime, the solution I just talked about, an internal price, enables you to make responsible decisions with a long-term ownership point in mind. And you have to have an ROI, okay, that enables you to force behavioral change inside your own decision-making.
Yeah, really helpful. And I like your footprint, handprint, blueprint. That's a good one. I might borrow that and attribute it to you. So, okay. So another thing you mentioned a minute ago was the activists. So one of my favorite sections in the book was you discussed the investment community, the activists to the institutional investors. And you've made the point that most of the owners of Dow stock are not actually owners, but renters, as you call them. This is, to me, one of the fundamental challenges that we deal with, which is that there's a huge difference between being a long-term share owner of a company versus being somebody who's in and out, and that leads to a lot of the short-termism. So can you talk a little bit about how you deal with those renters and And how have you tried to replace the renters with true owners?
Yeah, so it is an enormous body of work, and I think it speaks to many dimensions that have to align. And I have a whole chapter in the book about boards. And of course, one of the most important part of the alignment is the alignment of a board and management to dealing with the topic of external owners demanding returns in the short term, and those classes of owners, the shorts, the hedge funds, the activists, who are increasingly entering the stock register with a view of provoking short-term value creation. And then, fundamentally, you have to respond by, giving them short-term returns. And one of the responses is to cut back on CapEx, cut back on R&D, cut back on sustainability. So cutting back on the very thing that creates long-term value, right? So this dynamic and the notion of renters versus owners is something which I observed very quickly. People bought our stock because we were a commodity play and predictable, and we were a dividend play. And then to move it from that to an innovation play where the returns would happen over time, new metrics. I naively, and I talk about this in the book as a lesson, self-reflecting, the CEO I was at the beginning, thinking I could do that in a 2, 3, 4-year window, versus what it took and the CEO I became that enabled me to absolutely take the activist attack that we had and flip it on its head such that we could get the win-win. We don't have the time in this podcast, but I absolutely, totally think it's one of the most important things that a modern day CEO has to do, because otherwise the short-term owners will fundamentally gang up. They will fundamentally, take a run on the stock. They'll push for board membership, and they'll change the chemistry of a board to be disruptive. And look what's happening at Disney right now. And I think this discussion then can't have the playbook of, I accommodate to give you the short term by sacrificing the long term. So the short answer to what is a very a whole chapter is that what I developed was a board that was its own best activist, that incorporated people on the board, including suggestions from the activists, on people that once they understood strategy could push back on the short-term return. And so when you had people on the board that were suggested to be the financial engineers, who then flipped because they saw the value creation of doing the right thing, in my case, the Dow DuPont deal, right? Once I brought them under the tent and they became board members and they saw the huge value that could be created by that merger and the demerger, they said, oh, just a second. You're not going to do things just for the short term. You're not going to do share buybacks. You're not just going to do, raise dividend. You have to keep this strategy. So the board became its own best activist, became portfolio. So that's kind of job one. Put people on the board who understand the financial engineering point so that they can actually be credible representatives to the external community of why the strategy on long-term value creation also has a short-term benefit. And of course, that also meant that you had to be an engineer to shed businesses that weren't generating value, to do what they would otherwise do, okay, if they were running the place. So you had to prove that you were not in love with any business, that you weren't married to what history brought you. I changed 75% of Dow's portfolio, okay, 75%, and grew the company. So on the boards I'm on right now, I mean, in the transitions they're in, some very notable ones, that's what's being done now. I think you have to put the board in place that can absolutely mimic and mirror the needs of the short term, but keep the long term in place. Not easy to do, not suggesting it's just like that you put it in place, but I'm going to tell you, I articulate examples in the book about how I got it done, and I bow to the notion that short-term renters are there and real and can't be ignored, but I don't bow to their value hypothesis as being the only answer. And I finished by saying it's quite the conundrum today that we have so many examples where what we thought was short-term in the 80s, private equity, barbarians at the gate, KKR, are now long-term owners. The value creation of the private equity model, which then says maybe sovereign wealth funds, family offices, private equity might be the better owner going forward. In fact, if you look at the share registry of public companies, it's diminishing for this very fact.
Yeah, it's right. It's a very interesting change where, private equity does have some structural advantages, or as you said, sovereign wealth ownership or family ownership. Yeah, it's something that we're actually working on at FCL2. We'll have to get your advice, because how you make a board think long term is, if it's your family's name on the door, it just happened. But if it's not, it's very hard to turn a company into a family company. So
yes.
Do you think it's ownership? Do you think it's the personality of the people? Is it the culture of the board? If you had to pick one thing for a public company, you could, do one thing to a board of whatever company. What do you think it is?
Well, I talk about this notion of an enlightened board versus what I've talked about as an activist board. What I described to you just now as an activist board, which I think came after an engaged board. So you think about the progression. Engaged means I know the company strategy. I'm engaged as a board member. I'm not just showing up and having dinner. So that type of board, I think most of us have had and still have in the public company context, but it's not enough. You've got to graduate and add the skill set of activists, which is the shareholder and a portfolio approach and a capital allocation approach is a skill set that needs to be put on the board. But the next level, if I had to wave the wand and say, what's the next level? There's this notion of an enlightened board, which absolutely totally brings the entire value chain into play, which means that you need people who can represent, the geopolitical angle, the digital angle, the gender and equality angle. And so it's not diversity for diversity's sake. It's absolutely totally thinking about contextual decision-making versus content-based decision-making. So the horizontal thought versus the vertical thought. And a CEO that's nimble, that actually can bounce between what those sort of inputs can be. So because remember, board members come 7-8 times a year. So what that CEO C-suite needs to do, and I do it as a board member now on these boards I'm on, is encourage the CEO and the C-suite to spend time with each board member between boards to absolutely totally get them to a point when they're at the board meeting, really get into contextual-based decision-making. For example, in my case, investing in Saudi Arabia when it wasn't the thing to do, took an enormous amount of work with each board member to get them to overcome their internal prejudices, their external prejudices, what got them to the table about thinking a certain way, but most importantly, bringing their dimension of thought into the decision-making. So that's an example of how, if I could wave a wand, I'd try to get boards to that point, but it does need the C-suite to be responsive.
Okay, last question for you. To kind of pull all this together, if you think about, 4 decades of global leadership experience, where the world is going, all the people that you're talking to, could you share a prediction for leaders where they'll really, what is the thing that they're going to have to incorporate in the next few years or face in the next few years that they probably are not thinking about right now? So the sort of look around the corner, if you could give a message to people who are in leadership or growing into leadership, get ready now, because you're going to need to be ready for this in the long run. What's your advice?
I take a stab at that at the last chapter. And so as the book was out, 9 months ago. So even my own thinking on that, answering that question is evolving from that chapter, which what I say in the chapter is, if you think about where the world's heading, what I was taught in terms of growing value in an enterprise was double down on what you know, invest in that, and become number one or number two in that market or in that business. And that superseded the previous generation that built the conglomerate. Be good at 6 or 7 different businesses, 6 or 7 different things, leverage the culture across the conglomerate. Of course, the sum of the parts analysis. Financial engineering said, no, that's out. Therefore, born was this notion of becoming a more vertical, less disparate, less diluted, all very strong value creation. However, what that also brought is the loss of entrepreneurship and the loss of risk-taking and the loss of taking a risk on things that are on what we call your adjacencies. In other words, and he's probably an incredibly, extreme example of my point, but I'll say it. Elon Musk takes engineering and entrepreneurship, builds Tesla, and then builds SpaceX, and then tries the Boring Company, and 2 or 3 other things he's doing that still are leveraging, not in a conglomerate sense, but absolutely taking a risk and creating a new market. And I think the first thing I'd say the leader for the next 20 years that he needs to do is to take the playbook that all these risks that we've talked about in this podcast and the book are opportunities, that new profit pools are being created before our very eyes, that you can make money in those profit pools by being, unlike what we were taught, be the leading player in taking the risk, and don't be any worse than the fast follower. Okay. In other words, don't be the laggard, because it'll pass you by. Okay. And so there's going to be enough profit for the one that takes the most risk, but also the most reward, but the most risk from that, which means bet your enterprise on what that market is telling you. And I think for me, it brings together this notion of where's the available markets? Well, before our very eyes, society is demanding a clean planet, in Elon Musk's case, living on another planet, okay, a new business model, new supply chain transparencies, onshoring for security, protection of data and utilization of data for benefit of humanity, AI. These are new profit pools that are being created, that if your enterprise has capability and you're in one of those parts of that, then leverage over pretty fast and be the leader in creating that new profit pool. And to do that, speak of it as a purpose-based profit. In other words, I'm doing it for the good of society, which therefore is for the good of all my stakeholders, and I'm going to make money in doing it. And with that money, I'm going to reinvest it in taking the next risk. So Mark Benioff with Salesforce, a great example of that. And so these risk takers, some born out of most born out of Silicon Valley, some born out of, your backyard of Boston, these entrepreneurial ecosystems that really have made America great, okay, in this dynamic 21st century of disruption, bring that together in your, let's call it 100-year-old enterprise, and make that the prevailing culture in terms of the next 20 years. And you will earn the right, not only from society, but from your financial owner, not renter, as well as all your stakeholders, okay, to be the leader in this century. And I think that's the mindset back to your question on the academy, I'm teaching at the academy.
Wow, that's really, really powerful and very long-term focus. So, Andrew, thank you so much. The book, again, is Leading Through Disruption, A Changemaker's Guide to 21st Century Leadership. And we so appreciate your writing this, your sharing it with us, and of course, your leadership globally and your support for FCLT Global. So thank you.
Thank you, Sarah. Lovely to be with you.
That concludes another episode of Going Long with FCLT Global. We hope you enjoyed our conversation today and encourage you to continue exploring our resources and research at www.fcltglobal.org. If you enjoyed today's episode, don't forget to subscribe, leave a review, and share with others who may find value in Going Long with FCLT Global.